Hi students, welcome to Sunil's tutorial. I'm Sunil Mirwani and today we'll be doing this chapter called as investment account. We are going to do question number 4 today. We are going to do question number 4 today in the books of Bangalore Investments. In the books of Bangalore Investments. That's the name of the company which is buying this. What are they buying? They are buying 6% debentures. So investment account for 6% debentures, right, for the year ending for the year ending 31st March. Bangalore Investment holds 1200 6% debentures of 100 each in Minerva Limited on 1st April 2004. Let's first find out on what dates are the interest due. They said that interest is payable on 30th June and 31st December. Always write that down first. Working note 1. Right? Interest payable on 30th June and 31st December. Right? Okay, there are two dates on which interest is payable. Let's start with the sum, guys. We are saying that on 1st April 2004, the year ends on 31st March 2004. Okay, 2004, it won't be 4, it will be 2005. If you are bringing the year on 31st, we end in 2005. 1st April, let's start. To balance brought down. Balance brought down. This is cost is 1,40,000. They're saying that they held 1200 debentures. 1200 debentures. Face value of each debenture is 100 rupees. 1200 debentures of 100 each, 1,20,000. Capital value they've given you is 1,40,000. Straightforward. Let's calculate the interest. Working note 2. Interest on 1st April. Right? You have face value 1,20,000. Interest is 6%. Now, closest previous date. Closest previous date is 31st December. So that means that will be 3 months. 1800. Right? Next, let's see this. On 1st June. Now, before 1st June, there is going. Okay, you have 30th June the interest payment, and this is 1st June. On 1st June, 400 debentures are purchased come interest. Debit what comes in 1st June to bank. You have purchased 400 debentures of 100 each, right? At 40,800 come interest. Okay, let's see this. Let's see the interest calculation. Working note 3. Interest on 1st June. 40,000 into 6% into 1st June. This is going to be from 31st December to 1st June, 5 months.
1,000.
1,000. Okay. So the interest is going to be 1,000. Okay. Now they are saying that it is purchased come interest. The capital value is given to you as 40,800. Since it is come interest, I will have to less the interest. Interest we just calculated 1,000, so my capital value becomes 39,800. Right? So your capital value is 39,800. Fine. Next. 1st November. Now before 1st November, you're going to have 30th June on which interest payment is going to be done. Working note 4. Let's calculate the interest on 30th June. Interest on 30th June. Total, what is the value of securities you are holding? You had 1,20,000 plus another 40,000. you're holding securities of 1,60,000. These are 6% securities, and closest previous date is 31st December. So that means this is 6 months.
4,800.
4,800. Let's have the interest paid on this particular date. So on 30th June 2004 by bank, the interest paid is 4,800. Right? Okay. Now let's move on ahead. On 1st November, 400 debentures were again purchased. X interest at 38,400. Purchase. Debit what comes in 1st November to bank. I have purchased how many debentures? 400 debentures of 100 each, so 40,000. Right? I have purchased them for 30,400. Let's calculate the working note for this first. Interest on 1st November. Interest on 1st November 40,000 into 6%. Closest previous date. You just finished paying interest on 30th June. So July, August, September, October. 4 months. Somebody please help me calculate.
800.
800. So the interest is going to be 800. Since this is X interest, I need not deduct the interest. So interest is 800. And this is 38,400. I purchased the debentures. Okay. Then on 30th November, I sold debentures. Sold. Debit what comes in, credit what goes out. On 30th November, I sold by bank. I sold debentures of 600 debentures of 100 each. That means 60,000. Let's see the working note for this. Working note 6. Interest on 30th November. I've sold 60,000 worth debentures. These are 6% debentures. Closest previous date is going to be 5 months. Someone please help me calculate the interest. 1,500. Now, these have been sold for come interest. So my capital value is 64,500 less interest is 1,500. That comes to 63,000. There is no brokerage, I presume. No. Okay. So this is going to be interest is 1,500 and capital value is 63,000. Okay. Now, once this is done, you have to calculate the profit or loss. Working note 7. Nominal value, capital value. As on 30th November, what is the nominal value of investments held by me? 1,20,000 plus 40 plus 40. 2 lakhs. What is their capital value? Someone please add them. 140 plus 39,800 plus 38,400.
218,200.
18,200.
Right? Now, I have sold investments of 60,000. So, in that case, what should my expected selling price be?
65,460.
Selling price, how much?
65,460.
65,460. I should have sold them for 65,460. How much is my actual selling price? My actual selling price is 63,000. Loss. 2460. Right? Loss will come here. 30th November by P&L. This is 2460. Loss on the credit side. Okay, let's move on ahead. On 31st December, 800 debentures were sold ex interest for 73,000. Right? Now at this point, a lot of students get confused in this entry. That should I first pay the interest and then sell the debentures, or should I sell the debentures or pay the interest? Either way does not make a difference. Anyway, you can do it anyway. Right? Either way, you will end up getting the same answer only. Fine, do you get this thing clear? What I'm going to do is I will sell the debentures first and then pay the interest. Okay? Sell. Debit what comes in, credit what goes out by bank. I'm going to sell the debentures. We are selling 800 debentures of 100 each. 800 debentures of 100 each. That means 80,000. Let's calculate the working note for this, guys. Working note 8. Interest on 31st December. Right? Interest on 31st December, 80,000. 6% for 6 months. Someone please help me calculate.
2,400.
2,400. Right? I sold them X interest. Okay, X interest, so I will not subtract the interest. So this is going to be 2,400 is my interest, and I sold them for 77,300. Now since I have sold them, I'll have to calculate the profit or loss. Let's calculate the profit or loss. Nominal value, and the next is capital value. I have to consider all transactions before 31st December. What is the nominal value of investments held by me? 1,40,000. I had 2 lakhs, out of which I had sold off 60,000. So 1,40,000. What's the capital value of investments held by me? Someone please calculate and tell me.
2,18,200.
Did you subtract the 2,460 also?
150 to 740.
Someone please cross check 150 to 740. Right? You have to subtract that 2,460 also. All transactions before.
60,000 also.
See, it will be 140 plus 39,800 plus 38,400 minus 63 minus 2,460. Right? Now you have sold investments of 80,000. So in that case, what will your expected selling price be?
87 to 80.
Excuse me?
87 to 80.
87 to 80. Actual selling price 77,300. Right? That means I'm incurring a loss. Someone please help me calculate the loss.
9980.
9980, 31st December. By P&L, I'm incurring a loss of 9980. Right? Okay, once this is done, let's make the interest payment due. Working note 10. Interest payable on 31st December. Now, as on 31st December, what is the value of transactions, what is the value of investments that I'm holding? I had 2 lakhs, out of which I sold 60,000 and I've also sold 80,000. Someone please tell me what is the net value of investments I'm holding?
2 lakh minus 1,40,000.
I had 2 lakhs minus 140, 60,000.
60,000.
These are 6% investment. Closest previous date 6 months. Someone please help me calculate this.
1,800.
1,800. So 31st December by bank. I'm going to pay this interest 1,800. Done. Right? Now I need to close the books of accounts. The books of accounts are to be closed on 31st March. Okay, let's see this. So this is going to be 2005. I have to close the books of accounts. Someone please help me tally. Add the nominal value, please. Someone add the nominal value. This is 2 lakhs. This is 2005, 31st March by balance carried down. Someone please tell me how much is this? This is 60,000.
60,000.
Right? Now let's calculate the interest on the closing balance.
No, but we just calculated on 60,000.
But that was as on 31st December we paid the interest. From 31st December to 31st March I have to make the interest due. 3 months interest has not been paid. Right? So working note 11. Interest on, it's not the amount, you have to consider the dates. Okay? So interest on 31st March is 60,000, 6% for 3 months. Guys, everyone's understood why 3 months? Because from 31st December to 31st March is 3 months. 900. Someone please tally the capital account here. How much is the capital account?
2
218,
200.
218, 200. So this is 218, 200. Right? Someone please find out the difference.
Sixty-five 460.
How much?
65 460.
65, 460. Someone please add the credit side of interest.
So the debentures are quoted at par.
Yeah.
Debentures are
Quoted at par.
No, this is not.
prepare investment
Yeah.
account valuing closing balance at cost or market price, whichever is low. The debentures are quoted at par. Okay. Working note 12. The capital value is 65,460. Right? Quoted price. Now I have 60,000 debentures. That means I have 600 debentures quoted at par. Par value of which is 100. That means this is going to be 60,000. Okay. Closing stock. Closing stock has to be always valued at a lower price. So the lower price is 60,000. The lower price is 60,000. The difference, you have a difference of 5,460. That will be written here 31st March by P&L 5,460. Right? That's how you quote the instruments at quoted price. Someone please add the credit side of interest.
11,400.
11,400.
400.
11,400. This is 2005, 31st March to P&L. Someone please tell me the
7,800.
7,800. Right? That finishes that sum. We'll stop here for the day. Thank you very much.